Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news of growing turmoil in markets and trade worldwide. But first, today's dairy auction brought mixed results. Overall prices were down 1.2% in US dollar terms, with both whole milk powder and skim milk powder prices slipping about 1% each. But with the Kiwi dollar dropping just under 69 US cents today, the change in New Zealand dollars was a small plus 0.7% gain in overall prices. Today's movements won't be changing any farm gate payout forecasts on their own, and prices are still in the tight range we have pretty much seen since late 2016. Given what is happening with other commodities and the escalated threats to world trade, today's result is remarkably sanguine. President Trump said he is readying another $200 billion in Chinese goods for new 10% tariffs if Beijing retaliates against his previous tariff hikes. China has already said they will, calling the American move extortion. Beijing is angry now. Wall Street stocks are falling, with the Dow down more than 1%, turning negative for the year. The sharp escalation in the US-China trade dispute is unnerving investors, and there is a growing risk-off tone in trading. The greenback rose, but bond yields sank. And Chinese investors are rushing for the exits. More than one-third of equities on the Shanghai Exchange fell by the maximum 10% yesterday and were suspended trading for the day. The Shanghai Stock Exchange Index was down 3.8%. It was no better in Japan, where the Nikkei was down a chunky 1.8%. Hong Kong split the difference, being down 2.8%. The NZX didn't fare much better, being down 1.2% yesterday. There was a sea of red in stock markets around the world and overnight. Your KiwiSaver values will have taken a hit. American housing starts rose more than analysts expected in May. They were up 4.6% above the April level and 8% higher than the same month a year ago. They're now at their highest level since 2007, driven by a construction rebound in parts of the country that have lagged much of the economic recovery, as well as an extended apartment building boom there. China's reform moves in its corporate financing sector will be complicated by the trade dispute and stock market reaction. Bond defaults are up as regulators pressure the sector to clean up their act, but they were not counting on the systemic pressures at the same time. How many defaults they can tolerate in this time of stress is uncertain. Until now, new corporate bond issuance has been high. Debt levels are China's economy's Achilles heel. Just how nervous policymakers are at present was emphasised overnight, with the ECB chief saying he could delay their tapering if things get too wobbly. This is why bond yields have tanked overnight. And in case you missed this yesterday afternoon, house prices are falling in Australia's largest cities. Sydney recorded the third consecutive quarter of falling property prices and the first annual price fall since March 2012. While Melbourne prices fell 0.6%, the first quarterly drop there since September 2011. Brisbane and Perth house prices also fell. ANZ says the Sydney fall is on its way to a cumulative 10% drop from its peak. US Treasury yield, 10-year yield is down to 2.89%, a 4 basis points fall. The Chinese 10-year is now at 3.61%, also a 4 basis point fall, while the New Zealand equivalent is now at 2.88%, down 4 basis points as well. Gold is down another $3 in New York today to just $1,276 an ounce. And oil prices are down sharply in the US by nearly $1 a barrel, with the US price now just on $65 a barrel. The Brent benchmark, however, has changed very little and still at $75 a barrel. And the Kiwi dollar will start today just under 69 US cents as the greenback strengthens. On the cross rates were firmer at 93.5 Aussie cents and 59.6 euro cents. That keeps the TWI at 72.6 and still in its very tight June range. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.